Hey investors and welcome back. If you are watching the markets today, you know Bitcoin is back on the move. And while that's exciting, we need to talk about a stock that's doing something way more interesting than just riding the Bitcoin wave. I'm talking about Btbt or Btbt. This company is no longer your grandpa's Bitcoin miner. They are completely transforming their business, and the math shows the market has completely missed it. This is a transition story, and the balance sheet suggests the market is deeply mispricing it. So management, led by CEO Sam Tabar, is getting rid of the low-margin, painful business of Bitcoin mining. Instead, they are focusing on two major high-growth areas. So the first, Ethereum staking. Btbt is building one of the largest corporate treasuries of Ethereum. They sell their Bitcoin and buy ETH. Then they stake that Ethereum, which basically means locking it up to secure the network. In return, they get paid a nice passive yield. Think of it as a guaranteed low-risk interest payment on a massive digital bank account. As of recently, they hold over 150,000 ETH. So second, artificial intelligence. Their subsidiary White Fiber Inc. is supplying the servers and computing power, specifically those expensive GPUs that AI companies need to develop their models. They are selling picks and shovels in the new AI gold rush. So the money math, why it is undervalued? Here is where it gets interesting. Btbt has a super clean balance sheet. They have zero debt and over 600 million in total liquidity, cash and digital assets, giving them serious financial muscle. So let's look at the simple math. Their price to sales ratio is around 6.89 times. That's a reasonable price tag for their total revenue, especially considering the high growth markets they are in. But the biggest story is the price-to-book ratio, which sits at just 0.69 times. So what does this mean? A ratio below 1 means the company's market cap is less than the net value of its assets. You're effectively paying 69 cents for every dollar of shareholder equity. The market is currently valuing this company at a massive 31% discount to its total equity, which largely consists of liquid cash and that huge growing Ethereum treasury. This signals a deep mispricing. So now for the risks, the big one is clear Ethereum price. If ETH takes a nosedive, it instantly hits the value of their treasury and cuts their passive staking income. The other risk is execution. They have to keep successfully growing that high-margin white fiber AI segment to prove the pivot is real. The final verdict is Btbt is a company trading at a significant discount to its book value, funded by a zero-debt balance sheet, and positioned for growth in the two biggest tech narratives, AI and the staking economy.